Hey everyone, and welcome to another episode of Pathfinder presented by Payload, the leading digital media company in the aerospace industry. I'm your host, Mo Islam, and we're going to mix things up today. We're not interviewing a founder, but instead spending time with an investor. I have the pleasure of welcoming Kirk Konert to the show, a partner and key figure at AE Industrial Partners, one of the leading aerospace and defense private equity firms in the world. A lot to go through today, but before we get started, first, a word from our sponsor, SpiderOak, a leader in space cybersecurity. SpiderOak's Orbit Secure software is designed for hybrid space operators struggling to manage the chaos of securing data flow and access to and from tens of thousands of small satellites in low Earth orbit. Using a unique combination of end-to-end zero-trust encryption and blockchain distributed ledger, Orbit Secure allows your mission to orchestrate and secure Earth-to-orbit, orbit-to-Earth transmission, communication, and storage of sensitive data across even the most complex and unsecure hybrid space environments. To learn how Orbit Secure can bring zero-trust security and resiliency to your zero-gravity environments, check out SpiderOak at www.spideroak.com. Kirk, welcome to the show.
Thanks for having me.
Of course. Very excited to have you. So you are a senior partner at a private equity firm. We've had a few different VCs on the show before, but for the listeners who are not familiar with private equity, can you walk through what it is and what goal is your firm ultimately trying to achieve?
Yeah, happy to do that. Yeah, we're like VC firms in that we invest in private companies. We find ways to deploy capital in private companies. We're just not as cool as our VC brethren. We're not as good at hype and marketing as they are. Not just kidding, but we're really it's about the stage of the company that we're investing in. As a PE fund, we are focused on later stage companies that have solved more of the technical and technological risk, have established a market, and I've taken some of that sort of the early stage risk off the table. So that's really the biggest difference. Private equity also tends to put more capital invested in a particular company. So VC tend to spread bets around to several companies, but they take smaller bets. We take much larger bets in companies and tend to have a controlling stake in those companies. So those are probably the biggest differences. But we're really trying to help companies we're focused on take them from, a smaller, medium-sized business, provide them capital to expand either organically through greenfielding new facilities, or they want to, go after a M&A transaction. We help provide that capital to do that. So try to take them from one stage of the company to transformation, maybe more transformational point of the company.
Got it. Okay. Give us a bit of the history of AE and the evolution of the strategy.
Yeah, it's a unique history. We were started as a family business as well. We were founded in 1998 by a father-son team, Brian Rowe, David Rowe. Brian was a former CEO of GE Aircraft Engine, was a pioneer in the jet engine space, basically created what we now call modern day air travel. Given his engineering prowess in developing the GE90, really changed the aerospace industry. When he decided to retire, and his son David decided to retire from Gulfstream, came together to start this family office to invest in small, medium-sized aerospace and defense companies. Really successful track record investing the family capital in that ecosystem. As that continued to expand, decided to try to expand into attracting institutional capital to AE Industrial. So take other people's capital and invest on their behalf. So that's when I joined. A lot of our partners joined to really transform AE Industrial into what it is today, which is an asset manager of $5.5 billion of capital. We started this journey about 2014. Started with
The transition from call it family office to taking outside capital was around 2014. You said
2014.
Got it.
So that transformation started in 2014. We started with $0 of assets under management. Now we manage over $5 billion. But it's really kept that core focus of investing in aerospace defense middle market companies. That's what we know. That's what we love to do. That's what we have passion for, and where we think we can add most value to that industry and why our LPs invest behind us. So that's sort of the history, and go into more of what our strategy is today. But that is sort of where we came from as a firm.
How'd you end up at the firm?
It's kind of a funny story in that a lot of people in space tend to have that childhood sort of connection with space. I had that, but I'm not an engineer. I'm not an aerospace guru in the sense of that I grew up in that world. My career was really started in investment banking, and then investing in things like retail and restaurants. So I was more of an investor. And I got a call from a buddy. He said, "Hey, we're starting this firm. They're a family office. They want to make this transition. Would you want to join?" I said, "Well, that sounds kind of crazy. I have a pretty good job over here. I don't know anything about aerospace. Tell me a little more about it." But as I dug in, what I learned was the people around this firm, they are aerospace insiders, right? When there is a capital need, when there is an issue, when an OEM has a problem, they call it AE Industrial, because we are considered a strategic partner in this industry. So that gave me a lot of comfort in that. Well, this is sort of a startup, but they've got people who have really established unique relationships in this industry. I think there's something here in that we can carve out a niche as a sector-focused firm. LPs can invest in generalists that are sort of good investors, but we can be really good investors in a sector that we know and that we have passion for. And I think that's obviously played out as maybe not even as I expected, but probably better than I expected.
Well, I'll have to say, so Kirk, I've obviously known you for quite a bit of time now, and I did not know that you, coming into AE, had no A&D experience. So I got to say, hats off to you, because you've done a phenomenal job, and you're a key leader at that firm now. So it's how'd you actually? I wasn't even. We're gonna have to go in a slightly different direction for a second. Like, how did you get up to speed so quickly? Like, what? Like, clearly the passion was there, and you had the investment experience, and a lot of that was obviously applicable, right? It's just like learning a new industry. But like, how'd you get up to speed so quickly?
Read a lot of payload newsletters.
If only you were around back then.
It's really just diving in, right? It's diving into the industry, reading even technical books around and papers around things like rocket science and satellites and aerospace, jet engines. It's required reading. And when you come to AE, you have to read like intro to jet engines, because it drives a lot of what we do as a firm. So really diving in, even the technical perspective, leveraging the great people we have around this firm, whether they're partners, associates, operating partners, learning from them, diving into the companies. And, I think that's really how I've been able to get up to speed, and, obviously have a desire to be a leader in this sector and make AE the leader in the sector and investing in space.
Yeah, so let's talk a little bit about that. So as far as strategy, right, you have a pretty robust model. You make control-oriented investments. You invest across the capital structure, meaning like equity and debt. I also noticed that you have an aircraft leasing business. And then, of course, like biggest wild card, you actually have a venture business as well. So, and I'm referring to Horizon X, of course. Can you talk a little bit about like how those strategies all interrelate with one another, or do they operate in a little bit of a silo?
Yeah, it really comes down to what our core sector expertise and focus is: aerospace defense, right? We want to leverage that core expertise to provide every product we can into that marketplace, right? So when you think about how we've grown, we did start as the flagship buyout fund, really just taking control positions in companies, a traditional private equity firm model. As we developed this firm and built this firm, our funnel became very large, right? And we saw a ton of opportunities, whether it was a seed stage, Series A, Series B, buyout, debt, leasing opportunities. We see so many opportunities we had to turn away, right? Because it didn't fit within this flagship buyout fund and what our LPs are investing in that fund for and their risk return profile. So we felt like we built this unbelievable sourcing and origination function and value added operational function at AE. Let's go leverage that across these different life cycles of companies. So that's what led us to expand into with buying and partnering with Boeing Horizon X and becoming AEI Horizon X. Led us to take that over, right, and have a venture capital fund that invests in Series A, seed, Series B type companies in our core sectors. And I think that was just a natural iteration of AE, and we've expanded that into now we do growth equity deals, we do even venture debt type transactions, because from our perspective, there are only so many good ideas in our markets, right? We can't let a specific capital solution get in the way of backing the best founders, backing the best companies. If we find those companies and founders, let's find a way to back them, partner with them. And so that's why we've sort of have all these different products. So when we go to how it interrelates, right? We go to a founder or we go to a company, we go in with an open mind, right? And say, what are you looking for in a partner and a capital partner, right? And our selling point is obviously we have this sector focus, we have this sector expertise, we can bring some value, hopefully, to our companies. But what do you want? What is it? Do you want capital? Do you want a partner that takes control and allows you to take more of a back seat? Is it, hey, you just want capital to expand and grow? Is it you want to go after an M&A transaction? Whatever it is, we can now provide that capital solution to those companies.
So taking a quick step back, because it's clearly you have the tool set to get involved in any type of transaction or kind of life cycle of a business. How do you categorize the industry, right, from an investment or thesis perspective? Like, what is the AE kind of approach when it comes to like thinking about the industry? And I know you guys focus on aerospace and defense, so feel free to kind of take a broader approach than just talking about space specifically.
Yeah, I would say we how I'd answer, and then I can dig into wherever you want to. I'd answer it would be we're very agnostic in terms of the type of companies we invest in, right? We invest in obviously a rocket launcher. We invest in a satellite manufacturer. We invest in a pure services company, an engineering service. We invest in a distribution company. So it's a very, very agnostic in terms of where it sits in the ecosystem. There are parts of the ecosystem where we're maybe less inclined to invest in versus others. But it's really because we're so sector focused, it's hard to be too picky around which part of the ecosystem you're going to invest in, right? So we try to find the best companies in the best subsectors within aerospace and defense to back, right? As opposed to, let's go we love launch, so let's go spread our bets across 10 launch companies. No, it's more about, hey, we believe there's an opportunity to launch. Let's go find what we think the winner is. And if we can't invest in it, because that happens a lot, right? You can't invest in that best. Then you go to the next subsector. You find what's the best company that we want to invest in. Let's go see if we can find it. That's how we categorize it, and we split it out in our firm where different partners have different sector focus. I focus on space and defense. Others in our firm partners focus on commercial aerospace. They might focus on a pure government services like an IT service, cybersecurity type company. But I've lead our space practice here at AE.
So understanding that you're relatively agnostic across, it's just, which I understand. It's really, we're going to go where the opportunity set is. What do you look for? And let's maybe focus, because I know the question I'm about to ask can be thought of from the lens of the venture arm or like the private equity control buyout side. But maybe let's think about it from the control buyout perspective. Like, what are you looking for in an investment, right? What are sort of like high level, like you've identified, let's just take launch as an example. You identified launch as an area that you want to be in for, various macro reasons or, supply demand reasons that you've identified. What's sort of the next step? What are you looking for?
Yeah. And this applies generally across all strategies, right? But number one, it's people, right? Every business is about the people that are in it, that are running it, that are part of the everyday. If you don't have the best people, you're going to lose, right? It's just a fact. And we pride ourselves in picking the best managers, the best founders, because without that, we could have the best technology, we could have the best mousetrap, we could have the best business plan. It's likely going to fail. Like, it might succeed in spite of us, but like it's not the winning formula, right? So we really focus on, do we have a great team? Do they have a great culture? Do they have a winning culture? That's probably number one. Number two is specifically around what I focus on. What's the mission of the company, right? And for us, like, national security and making humanity better, like, is a key mission for our companies and what we invest in. Like, some people, like I said, like, I used to invest in retail and restaurants. Like, that's cool. Management meetings were awesome because you get to taste food, but like, it's not going to change humanity. It's also not going to affect national security. That doesn't get me excited, right? That doesn't get, that's not why our LPs pay us to invest their capital, right? We think there's more than just making money, right? It's more about how do we make the world a better place, right? And I think that's a key focus of ours. I think as we think about control, this is more specific to control, right? We want a market that is established, right? We want a market that customers are paying dollars today for a differentiated product and service, right? So when we think about Firefly, for example, one of our investments, right? We picked that company because they had paying customers for both of their key products, right? And we didn't need to solve, hey, there might be a market for small launch vehicles in the future, right? It was happening now. So we need to have a market that is established, growing, and one that we believe will continue to grow. In space today, like, our focus tends to be in national security, right? That's where we think that's the most stable growing market for space today, right? We're excited about the commercial opportunities in the future, but today, given we're focused on more mature, sort of more stable investments in our control buyout, we want an established market. That tends to be national security space today. Our venture companies, obviously take different longer range bets, but for the control, that's what we focus on. And then the last 2 points I'd make would be around we really talk about how do we become a critical tollgate business within our markets we serve. What I mean by that is anytime you want to come bring a product to market, you want to get to a paying customer, you need a service or you need data, you have to come to our companies, right? So that's how we think about, like, either they're already doing that or they have a potential to be that company that it has a differentiated product or service where to get to market and to get a certain data or product, you have to come to our companies. That's where we think we can obviously get greater returns and establish greater enterprise value as a company. And then finally, right, can we add value? Right? Can AE add value? If we can't add value, like what are we? We're probably not the right partners. We're probably not the right investors for that particular asset.
So, kind of thinking through sort of like the AE portfolio. So you take kind of control. Let's just say you're taking control positions in different companies. Are you looking for any level of synergy between existing portfolio companies? Are there businesses where you look for, is that like potentially not a requirement, but something that you consider like, hey, if we buy this business, there's a potential new revenue stream for this other business? Like, I guess the question I'm really asking is like, what's sort of the value of being an AE portfolio company?
Yeah, there's definitely some of that. We don't force companies to work together, right? Because it has to make sense from a business perspective for each particular portfolio company to work together. But being part of the AE family allows you to have a different dialogue with senior executives at each one of those companies, right? We obviously can help foster relationships. We can help foster strategic discussions between portfolio companies. And we think that's a huge benefit, and we continuously try to help those companies learn from each other, learn best practices, figure out how they can team together for different opportunities. But again, if it makes sense for XYZ company to work with a competitor of another portfolio company, they should go do it, right? Because we want to create the best value for each portfolio company. So I think where we think the benefit of working with AE is because there's probably 2 or 3 points. One being we have the ability to help companies scale, right? A lot of the companies we invest in, York and Firefly are good examples, right? They've been a design and development company, and now they're shifting to a manufacturing company, a full rate production company. That's a big shift for a lot of companies, right? From all companies, right? When you have to go from those 2 stages, there are different challenges. There's a culture shift. There is a lack of expertise in those areas that we can bring to the table, right? Because we have people on our team who've done that before. They've run big manufacturing facilities. They've run large volume programs that they can bring their lean and best practices to the space sector, which historically has not had to use those because there haven't been that many volumes. So most of space is sort of this inflection point. Space sector is at this inflection point. And that's where we think we're unique, because we've done this with commercial aerospace and defense companies who've went through that journey. We can now apply that to space. That's why, if you speak to the founder of York, why he chose AE Industrial as his partner is because he saw this and hit the shift from making 1 to 10 satellites to hundreds of satellites, very analogous to jet engines. Jet engines, you make sort of that similar number of engines in a shop, and you make them the same way. And we have unique expertise to help York navigate sort of that shift from, again, making a couple satellites to hundreds. And that's where we think we can add a lot of value. Another area where we help our companies is really around M&A, right? We're pros at M&A, right? So that's what we do, right? We've done over 130 transactions over the last 5 years, all in our core sector. There's probably nobody else that's done that many transactions in this sector over that time period. So a lot of what we can help companies is be that function for them, identify the right strategic opportunities, execute for them, come up with a plan of integration of those companies. We basically created Redwire Space doing that, right? We found that there was an opportunity to consolidate this part of the component level part of the market. We just needed to back a team to go do that, provide the capital, and go execute on that plan. And that's what we did through eight transactions, acquisitions to create Redwire Space. But that's what we can do for every company that we partner with if M&A is part of the strategy.
I'm glad you brought up M&A because we're going to talk a lot about that and the current market in just a second. But I have one last question on something you brought up, which was, you mentioned, one of the things that you look for, and I think the number one thing you said was team, right? I'm kind of curious, like when you're talking about management teams, what are the things that you're looking for generally? And what are some like common red flags that you've identified in the past, right? So that either you need to come in and help work those through, or like maybe things where you're like, hey, great business, but with this type of personality in place, I don't think it's going to work.
Yeah. Look, we have a culture at AE that's no ego, right? And that's not a good fit for a lot of people, right? And that, like, you got to have some ego to be a founder. You have to, right? But like, not such a big ego that it gets in a way of, hey, listening to new ideas, listening to different perspectives, maybe challenging around the way you thought about doing things. Like, we do that to ourselves every day, all day. And if a team can't go through that process, that's a red flag for us, because we're all on the same team. We're all partnered together. All our incentives are aligned. Let's figure out a way to make this company better, more valuable, more strategic to its customers. In the market, like that's number one, is just check the ego at the door, and let's go be a team and figure out how to make something better. I think the other thing we look for is when there's a tendency sometimes of companies and leaders to own everything, right? And own and they're every strategic decision is made at a certain level. Every function sort of sits at a certain level. At AE, we believe in sort of fostering a team environment, right? In that you're pushing as much of the functional day-to-day activities and strategic decision-making as possible, as far as down as possible, right? And allowing the individuals of each company to bring their best and brightest ideas to the table to help make the company better. So it's similar to the first theme, but in terms of like empowerment of every single person at the company. If there's a company that an individual just started at a company yesterday and has a great idea, a different way of doing something, like that should be fostered, and that individual is empowered to go show off that idea, say that idea in front of the company. And that's how we're structured at AE, and that's what we try to foster at our portfolio companies.
No, it's a great point. I think one of the biggest challenges and oftentimes downfalls of founders and CEOs is when they don't know how to delegate and they are not sure how to, they're in every single part and every nook and cranny of the business, and oftentimes lose sight of the bigger picture. So, no, totally agree with you. We're going to have to take a quick break, though, for a hot second, just for a quick message from our sponsors. And when we come back, Kirk, I definitely want to talk a little bit about the broader macro markets and the M&A environment, because I can only imagine that it's it's shaping up to be a pretty interesting time to be in private equity right now. So we'll be right back. Space is the new frontier for cybersecurity. To quote the commander of the U.S. Space Force's Operations Command, cyber threats are unfortunately the soft underbelly of our global space networks. SpiderOak, the leader in space cybersecurity software, is dedicated to providing space operators with the solutions they need to protect hybrid space systems. Their Orbit Secure software uses a unique combination of end-to-end zero-trust encryption and blockchain distributed ledger, allowing missions to orchestrate and secure Earth-to-orbit, orbit-to-Earth transmission, communication, and storage of sensitive data across even the most complex and unsecure LEO and hybrid space systems. To learn how Orbit Secure can bring zero-trust security and resiliency to your zero-gravity environments, check out SpiderOak at www.spideroak.com. All right, Kirk, welcome back. So I want to talk a little bit about, you mentioned one of the things that that AE's quite good at is M&A and helping businesses think about consolidation and acquisition. There are a lot of space companies out there right now raising capital, right? A ton. I can think of like 5 or 6 right now off the top of my head that are trying to raise more than $100 million, right? So it's a tough time if you are raising. It's a great time if you're deploying, because there's a lot of leverage now that's falling back to the investor. What do you think? Let's start sort of high level, right? What do you think is going to happen over the next 12 months in the market, right? In the aerospace market from a fundraising perspective and a sort of company creation or company consolidation perspective?
Yeah, it's going to be, as you know, like the fundraising market is challenging for space companies or for any company for that matter, right? But given we're focused on space in this conversation, right? There are several companies that are looking for capital that could raise capital 24 months ago with a snap of their fingers at a valuation they said whatever they said. That's completely shifted, right? And I think as we think about the next 12 months, there will be failures, right? There will be failures in this sector. There will be consolidation in the sector because you think about it, the space industry is going to continue to grow. Right? We have belief that the market will continue to grow at a faster rate than GDP, a faster rate than the broader defense industry. The market's demand is still there, but the capital available to all these companies has diminished. So you have this issue of there were a ton of companies created and attracted capital. That number of companies can't exist. So what you're going to see is the strongest companies in their particular subsectors are actually going to benefit from this because they're going to have fewer competitors. They're going to consolidate them and acquiring them, or their competitors are going to go out of business because they're going to run out of capital. And you're going to see a more healthy ecosystem coming out of this because of that dynamic. I tell people there's probably there's been no better time in my career to invest in this sector, right? You can pick the companies you want to back, whether it's early stage growth or later stage, because there aren't as many people competing with you. You can find a valuation that's reasonable and makes sense, and you're backing a company that can get a bigger market share. I do think it will be challenging for several companies over the next 12 months, but at the end of the day, the overall industry is healthy, will continue to grow, and we're excited to be part of that.
So I'm curious, like, let's just say you come across a founder who's like, Kirk, I need advice. I have 12 months of runway left right now. Like, what do I do? What should I be doing right now? And I know that's a very vague question, but just kind of curious in whatever direction you think it should go. Like, what do you say to that founder right now that's building a company in this industry right now, let's just say has maybe a healthy mix of kind of potential commercial and government customers?
Figure out a way to extend it 24 months. I think it's about finding, outside of extending your runway, which is obvious advice, but it's really about finding what your core differentiated product or service is and just focus fiercely on that, and protect your capital to go after that one really good idea. Because I see a lot of companies try to be a lot of things to a lot of people. You don't want to do that in this market, right? You want to find what you're really, really good at. Because I think we're looking for those companies that are focused on a problem in this industry that have the right solution. That's better than having a maybe solution on a maybe problem in this market with 100 of those in this market. It's harder to make those bets.
There's a lot of maybe problems. There's a lot of maybe, and we've seen quite a bit of companies where it's more like a solution in search of a problem. Unfortunately, I think that's what the environment that 2020, 2021 created, when there was pretty much endless capital and people were raising big rounds off of decks, right? So, and off of I think one of the things that we commonly see is, a lot of companies raising money off of logos, right? Oh, I was at this company for this many years and this company this many years. But when you really dig in, there's a lot of that is just kind of branding exercises. So definitely agree with you on that. I saw a pretty interesting chart on I think a Morgan Stanley chart the other day with regards to the value. It was I think the metric was value completed per IPO, which was the total raise on average per IPO, and it's now. The point it's at now is as low. It's only been this low, I think, twice in the last 30 years. And in 2020, it peaked at around 300 million, which was the total the 300 million average value raised per deal through an IPO. That number now is at around 50 million, right? So somewhat all-time low. How do you think about now as an investor, right? You care about exits, right? How do you think about the IPO markets? Not only for the AE portfolio, but also sort of the aerospace industry at large. Where do you, when do you think it's going to recover?
Yeah. I mean, we have investments that had IPO aspirations for this time period or in 2023, right? That's not going to happen. I mean, it's just. I mean, I would love to be wrong about that, but I don't see the market opening up for equity offerings in the near term, right? I think there might be for some of the best stories and the multi-billion-dollar companies. There might be small windows over the next 12 months, but I think generally the market's closed until we see the Fed start to reduce rates. Or at least hold rates stable, and once we see sort of the recession happen or not happen, but at least have some market agreement on where the economy is going. I just don't see a lot of opportunity for IPOs being an exit. So what we have had our portfolio companies think through is, all right, the IPO window is not going to be closed forever, right? It will open in the future. I'm not going to be the doomsday person that says it's closed forever. But so it's about how do we manage capital until that time, whether that's a Series D round or an insider bridge round or whatever it might be, but figure out how do you get to the point where an IPO window could be open. As we think about other exits, though, I do think there's plenty of strategics that want more space exposure, especially in defense companies, right? They see the DoD budget, they see the NASA budget, and it's growing, right? It's growing faster than other areas. So they want to deploy capital into space. So I think you'll see continued activity, from strategics buying space companies. It might not be the exit that everybody wanted in terms of how big, but it's still going to be, I think it's still going to provide liquidity for companies in aerospace and defense in the near term.
Yeah, and I think one other point that you made me think of as far as like the IPO markets are concerned, like, and I agree, the IPO windows are going to open again, right? Definitely, there's no question they're going to open. Yep. And I've heard a prediction out there that one of the things that's going to help like reignite the IPO market might even be like a Starlink type IPO, right? Something like that would, should do well and could breathe some life back into the market. I think the other thing to kind of consider is that I actually read some stat. I think it was like maybe been a PitchBook stat or something, that there's 1,000 companies that have raised growth capital or later stage growth capital, right? Which means that you also have a backlog. Right. Yes, totally. The IPO window is going to open. And then you got to talk about all the companies in the last couple of years that weren't able to IPO. So like you're going to have a backlog. So that runway question becomes even more important, right? Because like, yes, there's going to be a time when the IPO window opens, but is it like you may not be next in line, right? The banks are going to go out and they're going to go after the businesses that are most mature and can be most successful in an IPO, right? So I think that's one thing that I haven't heard a lot of people talking about. But anyway,
I would say one of that is like there's a lot of crossover funds that invested in growth, the last 18 months, 24 months.
Yep.
They will want to see liquidity, and they can fuel that market when it opens a slight crack.
Right. No, exactly. So you touched on it a little bit. With regards to budgets and NASA budgets and defense budgets, but and this in and of itself could be a whole separate episode. But politics and geopolitics have become incredibly important again, right? You're seeing constant headlines now of de-dollarization and different things that different countries out there are doing in terms of like extending their reach and their influence more so than ever before. Like, how big, this is a tailwind, I think, no question. Like no one's going to argue that it's a tailwind for the industry, but how big of a tailwind do you see it as you think about investing in companies that have strong kind of government focus or revenue tied to the government?
That's where we see the most what I call stable growth, right, over the next few years. You look at the Space Force budget, you look at the DoD budget, you see it growing, right? It has to grow based on the priorities of the DoD and what we're facing from adversaries, right? So that's where we focus. Like if you look at our last two big space platforms, York was providing satellites for the SDA and for now Space Force for the transport layer. Their key customer is national security. That's where there's a lot of funding on that area. That's an area we want to find better solutions for that customer. That's driving our investment in Firefly, where we see a rapid response space being tactical responsive space being a key area for space resilience and the threats we see from adversaries, right? We think that's an area of explosive growth for the industry because of what the threats we face from a national security perspective. And you think about like that's the sort of called the hard power aspect of it, but there's also the soft power aspect of space, which affords the U.S. and our allies some unique benefits. Whether it's who's going to land on the moon first, has a commercial space station, who has a Starlink, all those who has sort of reliable launch. All those things sort of give the U.S. and its allies a unique advantage and ability to establish space norms, the Artemis Accords, things like that that are we benefit from that as a country, as we think about us as a spacefaring nation. That look, we're competing for influence in that sphere of influence with China and Russia and what they're trying to establish as an alternative.
Right. I got a few fun questions for you.
Yeah.
Just as we close out our time. Let's just say I love the walking down the street bumping into someone type question. So let's just say you're doing that and you bump into someone, get in the conversation, you find out, oh, they're very talented emerging investor, and they need your advice. Lots of people asking Kirk for advice today. They came up to you and they say, Kirk, I'm starting a fund. What sectors or areas of the market should I be focused on to generate the most alpha? What would you say? Like, I'm starting a fund from scratch, day one, day zero. Where am I going to generate the most alpha?
Stay out of my sector because I got all the alpha. Just kidding. No, I would say for that, it's really about what you're passionate for, right? At the end of the day, you will find a way to create alpha and value for yourself and for investors in areas that you love. Because look, you're going to spend more time on that. You're going to want to go take that extra step. You're going to want to have those late nights, analyzing the industry, making that cold call, establishing that relationship. That's the best advice I could give is like, what do you love doing? What are you passionate for? That will give you a leg up against anybody. You go against a generalist, you're going to beat them. You will, because they don't have the same passion for the area you have passion for than you do. You will win, and that's the advice I'd give.
Sorry, is that your way of saying specialty funds are can generate higher, better alpha than generalists?
I mean, look, I think the specialist firms have, and they do, I think they do, but like if you think about generalists in terms of they have a different focus and can generate alpha because of that focus. So like a Carlyle or a Blackstone, because of their breadth and scale, that gives them ability to generate alpha that way.
Got it. Okay. One more hypothetical for you.
Yeah.
So I'm at Barnes & Nobles. I mean, no one goes to Barnes & Nobles or any of those bookstores anymore, but let's just say I'm there.
My kids do.
The kids do, exactly. They're actually opening a Barnes & Nobles near my apartment, and I'm like, damn, like I was like, wow, that's interesting. Yeah. I didn't know that they were opening. They're like expanding their brick and mortar footprint. But anyway, I'm in Barnes & Nobles. I'm like in the aerospace section because I love aerospace, of course, and I find a book about AE. Oh, and it turns out it's about AE's entire history up through the present. I read this book. What do you think is my one key takeaway as like the key to AE's success? Like what has been like the success? Like if you were to like read a book like that and just like your takeaway is like, wow, like that was the one thing that really stood out and helped differentiate AE from everyone else. And really, and sorry, I know that's a tough question. It's actually a pretty tough question. If someone asked me about Payload, I don't know what I would say right now. So here's what you think.
I would say that what differentiates us and allows us to be successful, right, is our willingness to take bold bets, right? I don't think other investment firms and especially in private equity, take the bold bets that we do. There aren't private equity firms are buying a rocket launch company that had never reached orbit before, right? I don't think other firms are willing to take those bets that we are, because we're so confident in our sector expertise. Yeah, we might lose sometimes. Yeah, but we will not. We will not, because we don't lack ambition and taking bold bets. And I think that's allowed us to grow fast, to attract best talent, to attract best portfolio companies, because we're willing to take those bold bets.
Yeah, great answer. I'll take it. Actually, I have one more question, which is not something we talked about today, but kind of curious. Starship prediction. What do you think is going to happen on that launch?
I think I listened to your prior episode, so I'm a little. I think they'll make it through Max Q, and then I think that's probably it. I hope they're successful all the way, honestly, right? Because you mentioned this on your prior episode, was that like SpaceX needs this to work. We need SpaceX to be successful, despite we compete with them in some areas. We're partners in some areas. We need them to be successful. Just think about the amount of capital that's gone into SpaceX. Yeah, and that's healthy for the ecosystem, for the most valuable space company to have success. Starship changes the game for the industry, and I'm hopeful they make it through. But my expectation is they don't make it full all the way to success.
We'll see. I had to ask. It's just so topical right now, but I had to ask. And I'm still shocked by when I talk to some folks not in the industry about, they're just like, "What Starship?" And I'm like, "Man, we are early." We are early. Kirk, thanks so much for being on the show. This is a pleasure. Really great to have you. And thanks so much. I know you're a busy guy.
Yeah, thanks for having me. Great time.
Great.